Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, May the 9th. We are going to be reviewing yesterday's loans officer survey from the Fed. Really interesting data from the banks, from the survey on loan, on tightening, and on data regarding credit easing or tightening. We are going to also review some earnings from yesterday, PayPal, Palantir, and Lucid. And also, we are going to perform technical analysis today that we are seeing weakness across the board. And I think is all focus, all due to this credit tightening that we are seeing across all banks that may impact even higher and farther than interest rates from the Fed. So let's start with earnings. Lucid posts a wider loss as demand concerns linger. Says it has enough cash to last into 2024. That would be good news, but demand destruction, the same thing that Tesla is, the same cause as why Tesla is decreasing the price of several models is due to demand destruction. They are taking advantage of that outlook, and Lucid is now reporting weaker earnings due to that. So Lucid actually performed pretty poorly on the gap down, as we can see from the charts. Look at this, it was like 8 or 10% down. So earnings, it was 10.66. And from there and into the open, looks like people are actually buying the dip. Right now it's 6.81 on the day in the negative, but look at this. This is not a chart that you like to buy, right? Look at this. Lucid is pretty volatile and it's trading like a small cap. It was some of the favorite from retailers along with Tesla, but I mean, we are kissing the lows. We are kissing $6. I mean, oh, investors are really worried, and maybe there are some traders that are day trading today for a dead cat bounce, but I don't feel it. What else? Palantir earnings beat as prediction of full year profitability. Palantir 5 cents adjusted versus 4 cents and 25, almost 20 million more on revenue. Looks really good because look at this chart. Look at this gap up. If we take, this is a really different chart. This might be some of the push that some traders are doing towards this level 10 might be, but again, so after the pandemic, a lot of these stocks are really beaten down. And it's not only Lucid, it's also Palantir, it's also PayPal that we are going to review right now. But before that, oil giant Saudi Aramco post 19% drop in first quarter. Really surprising. This is due to lower earnings, lower profit due to the drop in oil. But we saw in the past, in the past weeks, that the rest of the companies in oil sector are really doing good. So Aramco is feeling the pressure. We cannot see the charts, but it's really being hit by that. Well, I'm not worried about them for sure. PayPal. Let's talk about PayPal. PayPal, it announced that 2,000 employees will be cut. This from January 2023. They announced 2,000 employees cut, about 7% of its workforce, and then we saw the earnings. Earnings actually were pretty good, pretty good, but as always, consumer investors are really looking for outlook. And the outlook from PayPal is not looking good according to their earnings report. Today is 12% in the red. And again, look at this big push into the pandemic. PayPal benefited from a lot of online payments instead of actually going to the shops to pay. So online payments during the pandemic, and then it hit 300. Then we are now trading at 60, 70 something. All-time lows is 30. But look at this. This is just a bubble. I don't think PayPal will be able to really turn this out. I'm not holding PayPal, but I'm just analyzing the charts and the outlook. Even though they really beat expectations and they are looking strong, the outlook, I think online payments without credit, I don't think it's a good business, but PayPal is trying to put some credits onto the payments, but I don't know. Another one that is being destroyed after the big boost during the pandemic. That it is what it is. What else? Economic calendar. Loan officer survey. This is key to understand. Senior loan officer opinion survey on bank lending practices. Yesterday, I uploaded my video with the thumbnail saying credit crunch. Credit crunch means that due to the high interest rates from the Fed and also the stress that lack of liquidity and consumer outflows are putting into the banking sectors, banks are, due to uncertainty also, banks are really tightening credit to protect themselves and the uncertain outlook and the risk in the near future with high interest rates and a recession. This is the overall summary. But let's talk a little bit about certain data, certain numbers that would be quite really interesting. So basically, banks continue to tighten credit terms as loan demand drops. Loan demand. We've been passing through a lot of credit. People they don't have money from the pandemic, so they are taking credit and credits and credits and credits. But with these high interest rates, people just stopped taking those credits. So loan demand, not only from the consumer, but also from the businesses, from the commercial real estate. There are a lot of sectors that are showing less demand on loans. And this April's New York Federal Reserve survey of banks officers show that the monetary policy from the Fed is really putting a lot of pressure on regional banking. And due to that, they are tightening credit conditions. A net 46% of banks, or this is several tables, but the summary is that a net 46% of banks tightening credit terms of medium and large businesses, up from 44% in January. And during the presentation of the data, the Fed that was presenting data shared that the bank's tightening credit is at 46% versus this 44.8 in January, and broadest share of banks with weaker loan demands since 2009. So this is coming from 2009. We are at those levels. Nearly half of respondents to the Fed survey on near-term risk cited the US debt limit, which was not singled out as a risk in prior report. So this US debt limit is really causing a lot of uncertainty and really putting pressure on banks, and they are basically stopping these loans and just protecting themselves. Persistent inflation and monetary tightening alongside banking sector stress are the top potential risk in this survey. Large banks that are subject to liquidity coverage ratio have sufficient levels of high quality liquid assets to withstand expected short-term cash outflows. So right now, this is the what the Fed and also Secretary Yellen says, that banking sector is sound and resilient. So looks like they have high quality liquid assets to withstand any big outflow in cash. And we are prepared to address any bank liquidity pressures that may arise. So Fed are stepping to the plate, saying that they will support any bank going bankrupt or any bank needing liquidity. The banking sector overall remained resilient with substantial lows absorbing capacity. And recent turmoil in the banking industry has stabilized, but could weigh on credit conditions going forward. This is the key for you to understand. Looks like, apart from interest rates, the consumer is going to see less and less credit ease. US Treasury Secretary Yellen said that our projection is that as early as June the 1st, the Treasury will run out of cash and extraordinary measures to pay government debts. Be careful with this deadline. June 1st. This debt limit increase is going to be key for the markets, key for liquidity, key for the banks, and key for the indices. So overall, major shares of banks that reported having tightened standards or terms cited a less favorable or more uncertain economic outlook, reduced tolerance for risk, and deterioration in their current or expected liquidity position. So over the first quarter, significant net shares of banks reported having tightening lending standards for credit card, auto, and other consumer loans. So this is the situation. Banks are tightening the credit. Lending, lower demand, and I think this is really impacting today's market behavior, because as you can see, we are going to go now to the charts. So this is the Nasdaq. We were approaching this beautiful flat top into the upside breakout, but the 30-minute chart showed that yesterday we just couldn't go higher. We rejected settlement, this blue dashed line, and we start going lower into the overnight. And into the open, we try to go higher, but we got denied up here. This was a clear sign of weakness, and I was short, I think, on this pivot for 10 points or something like that. Let me check. Yeah. So this is just the market. The market is just showing signs of fear. Fear on the banking sector, that is everything in the red. Look at this. PacWest, 3%, 89 in the red during the overnight. And all the banks are in the red except Charles Schwab, that is barely in the green. Copper is just chopping around. Remember that tomorrow we have CPI, so markets are going to chop around. There's a lot of money in the sidelines or hedged, so they are just waiting. Dollar is going up, yields are going up. Look at the dailies. We are still putting a nice support down here, so this is not over yet. They are starting to think 15% of probability for next FOMC minute to raise again interest rates. That's a possibility. And December interest rate futures are going higher, saying that perhaps the Fed is not going to cut any interest rate this year. Fed John Williams just said that it will take time before inflation gets back to 2% target. And the current problems in the banking industry and their impact will factor into Williams' policy outlook. So basically, bad news for the market. Another Fed saying that maybe inflation is not coming down as expected. So be really careful in this environment, because I think that this is not over. This is not over. Russell, copper, one of the charts that you have to analyze every day. Russell 2000 for risk on assets, you have to have that. And also Bitcoin. Bitcoin is really playing sideways. So we are just waiting for what? Waiting for inflation tomorrow and to see what is actually happening with the banks, actually happening with this credit crunch, with this credit tightening. Going down, are we going to enter a recession, a mild recession, high interest rates? So there's a lot of things that are affecting the markets and the overall sentiment. And you just have to see, this is the market we are in. We are just trying to consolidate. We were doing that. We tried to push. We got rejected. Again, got rejected. We are fighting. Bulls are fighting, but it is not going up. So really pay attention to this daily setup, because I think this candle with 15,000 open interest on the Nasdaq is quite important. I still think there's a possibility to do this, but we might reject and do that. So be really careful. This is the calm before the storm. Just be patient. I think that's all. Overall review of the earnings, the loan survey from the Fed, really important. Just check the data and check all the information that they shared, and technical analysis for now. So for now, as long as it remains at this trend, I'm not interested in any long, but it looks like it's starting to cool a little bit into the finish of the lunch hour from noon to 1. So let's see what happens at the end of the day. Right now we are in the red. Apple is showing signs of maybe cooling a little bit, but it's quite weak. And point of interest is above price in Apple, in Microsoft. Tesla is right at point of control, so we might see a push, volume accumulating in this bottom, try to bottom out. Amazon is quite in the green, but fighting with the 200 daily moving average. So look at this. We are still fighting. Google also in the green, but look at this rejection. Google actually trying to enter the gap, but it couldn't clear the gap. And Meta is also in the green, but really choppy price action. Nvidia really in the red. And point of control right there. I don't know. There's no way I'm going to go long down here, but I'm waiting for volume to really support the price. And if I don't see that, I will just call it a day and wait for tomorrow. That is the day in which you have to focus, tomorrow. CPI. So that's all from my side. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day, reviewing news, reviewing earnings, performing technical analysis, and doing some performance analysis on other markets that may serve you as leading indicators, and also convergences and divergences for you to take opportunities if you are trading or if you are playing some swings on the day. That's what I do. And that's what I try to show you and try to teach you and try to share with you all my ideas and my fundamental understanding. So looks like we are trying to push a little bit. Let's see what happens. But remember that the trading day is not over yet. Anything can happen in this market, anything. And a lot of people is waiting for tomorrow. So I don't know if we are going to see any big moves to the upside. So discipline and risk management, remember, those are key for your success. Stay safe, everyone, and see you tomorrow.